Tech stocks continue their steep drop today amid the sell-off. Tesla down 7%, not far from a 25 closing low. NVIDIA down more than 5 on reports that Chinese competitor Huawei now is planning mass shipments of its own AI chip. For that, we'll turn to Deirdre Bosa in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. Call it big tech's pincer. NVIDIA might be the clearest example of an American company that's getting squeezed in the middle. There's Trump's politics at home, and then there's China's competitiveness abroad. In other words, volatility is giving way to structural questions. Reuters today reporting that Huawei is planning to begin mass shipments of its advanced AI chips to Chinese customers as early as next month. And that is key because it means that Huawei isn't just catching up, it is scaling. Moreover, some of those chips are being built inside China by SMIC, that is China's leading chip maker. Now, others may have ties to Taiwan Semi through a China-based middleman called Sofco, now under U.S. investigation. This all underscores the point. The more the U.S. tries to contain China's tech, the more creative and coordinated China gets. It's not just chips either. New data shows that Apple has lost its top spot in China's smartphone market to local rivals like Xiaomi and Huawei. That is being fueled in part by Beijing's consumer subsidies, just as American consumers may be starting to pull back amid the threat of recession. So now you have a second pincer or double squeeze on another American tech champion, Apple, which is also seeing losses today. At home, meanwhile, the regulatory pressure that continues to ramp up. This is in the backdrop today. Google and Meta each down 3% more than that, actually, now today, adding to very ugly monthly losses. The DOJ and Google, they're back in court today to argue remedies in the search trial, just days after Google suffered another antitrust loss in its ad tech case. And then, of course, there's Meta facing off against the FTC in its own trial. The Meg 7 basket, it's now down 4.3% today. It's lost, almost 15% since the president's so-called Liberation Day. And so the takeaway for investors, guys, especially on a day like today when we're seeing the sell-off accelerate, is that big tech, it's no longer just navigating volatility, but it's getting boxed in. Fundamentals, they are increasingly at odds with the headlines, and that's going to play out as we get deeper into earnings season. Google, of course, comes on this Thursday. Guys?
After Reuters reported that Chinese tech giant Huawei would start shipping cutting-edge AI processors as early as next month, after Trump's new export regulations essentially prohibited the company from selling its H20 chips in China, NVIDIA's stock dropped as high as 5.8% early Monday. NVIDIA's H100 AI chips, which are 2 generations behind Huawei's most recent Blackwell chips, are said to be competitive with the company's new 910C chips. In 2022, the U.S. government prohibited the export of H100 GPU graphics processing units to China. Even while NVIDIA has made chips especially for the Chinese market in response to several new U.S. trade regulations, the ever-tightening regulations mean that these chips are still significantly less powerful than their mainstream counterparts. The latest Huawei chip was reported over a week after NVIDIA said that, in order to comply with U.S. trade regulations, the U.S. government has essentially prohibited the sale of its H20 graphics processing units, a variant of its H100 AI chips designed for Chinese consumers. In a separate statement, the House Select Committee on China said it was demanding answers from NVIDIA over whether the company has previously complied with trade restrictions. On Monday, other chip stocks fell as well. While Advanced Micro Devices, which is also impacted by the new U.S. export regulations, saw a 3% decline, Broadcom saw a 4% decline. Qualcomm had a 2% decline. The shift in trade policy will cost NVIDIA $5.5 billion in missed contracts and inventories in the first quarter, the company revealed last week. Overall, Harlan Sur, an analyst at J.P. Morgan, estimated that the H20 prohibition will cost NVIDIA up to $16 billion in the current fiscal year. Stacy Rasgon, an analyst at Bernstein, wrote in a note to investors last week after the news, "We don't see the point in banning the H20. Doing so would only give Huawei further access to the Chinese AI market." NVIDIA's fiscal year 2025 revenue was $17 billion, or 13% from China, according to Rasgon. The day following the announcement of the limitation, NVIDIA's stock dropped 7%. NVIDIA's shares fell 7% the day after the restriction was announced. The company lost more than $230 billion, or 8% of its market value last week. Jensen Huang, the CEO of NVIDIA, met with trade officials in Beijing last week and is working to expand the company's manufacturing footprint in China. The business committed $500 billion to the expansion of the U.S. AI supply chain last week. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
We have more movers and names that will grab your attention today. Diane King-Hall, host of Morning Movers, is with us. And of course, NVIDIA is always in focus. Huawei could step up its chip shipments, and I see, 1 month NVIDIA is down almost 20%.
Yeah, NVIDIA has been under some heavy pressure, especially amid this sell-off that we've been seeing. The latest is because of news that Huawei seems to be ramping up its production for an alternative to NVIDIA's chip. This, according to a Reuters report. They're reportedly set to begin mass shipment of this advanced Ascend 910C GPU chip reportedly as early as next month. This would be an alternative for Chinese companies who have essentially been locked out of NVIDIA chips. It comes after the U.S. has tightened export controls. You recall that President Trump had tightened those rules around exports, around chips, and NVIDIA's H20 chip now requires this export license in order to be sold to China. You recall that was around that $5.5 billion write-down that NVIDIA said it would need to take. And keep in mind, it had already been dealing with tight export controls. There had been bans in the past that had blocked its flagship H100 and B200 chips from the Chinese market. And now what Huawei is doing is stepping up to the plate with this 910C. It's not necessarily an innovation, but it is an evolution. It's combining some chips to make a more powerful, more advanced chip for the Chinese market. It will reportedly match the H100 chip, which was already off the market in China. So it would increase the compute power and memory compared to that. And so it's an incremental upgrade. Does it necessarily line up with the H20 chip from NVIDIA? That remains to be seen, but it is Huawei trying to provide this alternative and become essentially, potentially the default chip over there versus NVIDIA's H20 chip.
Right, and this chip from Huawei, it has the performance, as you said, capabilities of NVIDIA's older H100 chip. And when people say, is the damage done? Because once the deals do come in with all these other countries and stuff, if these companies start taking the Huawei chips and say, hey, you know what, this is working out pretty great. Maybe we don't need NVIDIA chips. I mean, meantime, Jensen Huang is flailing, trying to ease some of the trade war fears. A final thought here on NVIDIA.
I mean, look, it is tough for NVIDIA because it just shows that there's more pain essentially to come when it comes to this trade war. In terms of how destructive it could be, it depends on how long this lasts, how tight these export rules continue to be. And the Chinese market for NVIDIA does represent a meaningful portion of its market. It's about around 20%, give or take, of the market that NVIDIA has for chips. So it is a tough situation that NVIDIA has, and hopefully the U.S. and China can come to some kind of resolution when it comes to trade and chips, and that if this is long enough, then obviously it could certainly demand for the H20 chip. It all depends on how long this battle lasts between the two superpowers.
Next.
As investors processed the mounting impact from the Biden and Trump administration's attempts to limit the company's semiconductor sales to China, NVIDIA's shares dropped over 5% on Monday morning. The most recent limitations, which were revealed by the White House last week, make it more difficult for NVIDIA to export its cutting-edge AI chips overseas. Chinese rivals now seem prepared to close the gap. Reports on Monday that Huawei intends to start mass shipping its own cutting-edge AI processor, the 910C, as early as next month dealt a severe blow. The action highlights China's growing attempt to circumvent American technology regulations and puts Huawei, one of the country's biggest tech firms, in a position to gain from the NVIDIA crackdown. NVIDIA's shares dropped over 5% on Monday morning as investors processed the mounting criticism of the Trump and Biden administration's attempts to limit the company's sales of chips to China. NVIDIA's ability to sell its cutting-edge AI chips overseas is further restricted by the most recent restrictions, which were revealed by the White House last week. Chinese rivals seem poised to close the gap now. On Monday, it was revealed that Huawei intends to start shipping large quantities of its own cutting-edge AI processor, the 910C, as early as next month. Huawei, one of China's biggest tech firms, is positioned as a possible benefactor of the crackdown on NVIDIA, and the action highlights China's growing attempt to circumvent U.S. technology prohibitions. Over the past month, NVIDIA's stock has dropped almost 17%. The S&P 500 has dropped 8% during this time, while the Nasdaq has dropped 10%. The quick response from the U.S. market can be explained by NVIDIA's global prominence. With a market valuation of around $2.5 trillion, it is not only the most valuable chipmaker in the world, but also the driving force behind AI infrastructure, supplying power to data centers, massive language models, and cutting-edge technology in a variety of industries. According to analysts, NVIDIA is a key player in the global tech arms race, controlling over 80% of the market for AI training chips. Because of its supremacy, NVIDIA's stock swings have the power to affect the whole U.S. market. Currently, the corporation accounts for over 5.5% of the S&P 500 and over 6% of the Nasdaq 100. NVIDIA is right in the heart of the storm as a result of Washington's intensifying trade war with China, which isn't just geopolitical drama, but is also causing volatility and erasing investor value across indexes. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I like when you give some perspective. The S&P 500, you're looking at a longer chart. What really stands out? Because people had two 20% years. Granted, they want more, and they're not getting it, and it's a little disconcerting to folks. What do you think here?
Well, I think you just look at the law of large numbers. I mean, two back-to-back 20+% years, the likelihood of that continuing is extremely small. And so coming into this year, I think if you even go back to the end of last year, the earnings estimates for some of the big tech companies had already started to come down. So, we should have, and we are obviously in a correction, but the market seemed to have been rolling over just going into the end of last year, beginning of this year. It just happens to have been exacerbated because of the tariff issues, and we're seeing, of course, a continuation drawdown because of that. So I think, this market wants to move higher. I think everyone's eager to buy. We just need some sort of policy relief to get the catalyst moving. We should see a lot of this capital outflow from the United States reverse. The markets seem to be, again, all else equal, contingent upon some stable earnings estimates, which are already coming down. This market seems to want to go higher, but it doesn't mean that we can't move, somewhere down to the 45, even 4,400 area on the S&P, which unfortunately is a very wide range considering where we're at right now. We're talking 700-800 point range in the broader index.
Bill Baruch, the founder and president of Blue Line Futures, stated on CNBC recently that NVIDIA's stock can hit $120 in a few weeks, and that the tech giant's shares can regain the $130 mark following its first quarter earnings report next month. According to Baruch, if there is any good news, NVIDIA might hit $115 to $120 in the coming weeks. And if it delivers good earnings, it will go back to $130, he stated. In the medium run, Baruch anticipated that the second half of this year will see an improvement in the performance of AI companies generally, and NVIDIA specifically. While the news has been bad, the stock market is currently being driven by uncertainty. However, because he thinks that a lot of negativity was flushed out, Baruch sees something positive. The shares have dropped 15% in the past month and 24% over the previous 3 months. Even though we recognize NVIDIA's potential, we are convinced other AI stocks have a better chance of producing larger profits in a shorter amount of time. While prominent AI stocks lost over 25%, one AI stock has increased since the start of 2025. Finding an AI stock that is more promising than NVIDIA, but prices for less than 5 times its earnings is what you're looking for. According to Bloomberg, when it comes to making financial investments in the erratic U.S. markets, individual investors are growing more tenacious. According to estimates, retail traders' portfolios are still far from break-even given the persistent dip-buying approach used throughout the meltdown, the business said, quoting Emma Wu of J.P. Morgan Chase & Co. In contrast to the overall market, individual investors' buy-the-dip approach during trade apprehensions has been performing better. It's interesting to note that since Trump's administration announced reciprocal tariffs on April 2nd, retail investors had invested $11 billion in stocks, according to Bloomberg, which cited statistics through Wednesday, April 9th, 2025. Bloomberg also pointed out that while established institutional investors are shifting their holdings to less hazardous assets like treasuries and international markets, individual investors are still dabbling in stocks. Stifel analysts maintained their $180 price target and buy recommendation for NVIDIA's shares. According to the company's experts, NVIDIA has a bright future, even though the recent events have raised uncertainty and put pressure on the market in the short term. They assert that its growth narrative is still robust and convincing in spite of the difficulties brought on by the new export restrictions. According to the company's regulatory filing, the U.S. government notified NVIDIA that it needs a license to export its H20 integrated circuits and any other circuits that meet the H20's memory bandwidth, interconnect bandwidth, or combination to China, including Hong Kong, Macau, and D5 countries, as well as to businesses based or having an ultimate parent there. According to NVIDIA, charges connected to H20 products for inventory, procurement obligations, and related reserves could total up to about $5.5 billion in its Q1 results. In other news, TD Cowen praised the business for its strong product pipeline and leadership in AI, even in the face of the Chinese market's difficulties. For the semiconductor chips and graphics processing units required to power AI applications, NVIDIA remained at the top of the industry. Our stock position was a relative detractor for the year since it is underweight compared to the almost 12% of the benchmark it currently represents. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
We have a big swing in pessimism, at least when it comes to the stock market. Steve Leisman's here. He has exclusive results of our latest All-America Economic Survey. Steve.
David, thank you. Yeah, Americans are more pessimistic on the stock market than at any time since 2023 in our CNBC All-America Economic Survey. And looking at the current tape today, it seems like it's probably the right call on the part of the public. Take a look right over here. 53% say it's a bad time to invest in stock. Just 38% say it's a good time. But the real story here is this amazing swing. Take a look here. In August, it was net negative. And this wave of optimism for stocks accompanied President Trump and his reelection in December. And then a huge swing towards negative. We have not seen in the 17 years of this poll a swing bigger towards optimism and then a bigger swing towards pessimism than we've seen in the entire time. And that comes right along with a bigger or a more concern about the economy. Take a look at the next slide here. What you see is just one more thing. There we go. There's 57% believe we are already or will be soon in the next year in a recession. 12% say we're already in a recession. 37% say no. That's a big number compared to where we have been in the past. And that goes along with concern about inflation, a big part of the way people are feeling right now. 61% say relative to their incomes and the cost of living, they are falling behind. Similar numbers from the Biden administration. And of course, we know that Americans expected a kind of different outcome. And that bleeds into pessimistic views on the economic outlook that looks a little bit like the stock market chart. They were positive in October, a little less positive because that was a big partisan negative from the Democrats, and now independents joining Democrats and feeling negative on the outlook. Guys, I'll preempt maybe your question on the stock market here, which is yes, when stocks are doing well, people are optimistic. When they're doing badly, they're pessimistic, but we have never seen these kinds of swings in the past, guys.
Yeah, no, it definitely makes sense given the moves in the stock market. Steve, I do wonder how, if the administration and Congress can get the tax bill more front and center and moving faster, if that would counteract any of the negativity, because that was part of why businesses and investors were optimistic, that and deregulation and more pro-growth policies. Well,
I think that's true. Our survey shows people do not like the tariffs. They're concerned about inflation. If you can change it, the president is positive on immigration and even deportation. Not huge majorities, but a majority on both of those issues. The other issues we poll for, foreign policy, tariffs, inflation, he's doing badly. And so if he can change the subject, I will say, though, Sarah, one thing that has interested me about the deregulation story, which I agree was a big part of the optimism that for business with the presidential election, is he keeps losing in court. And if he keeps losing in court, he lost a lot in court in the first term, and people thought he was going to be smarter this time around. Deregulation is even harder sometimes than regulation, so the president has to get that right if it's going to be effective.